Welcome everybody to another eye opener. These are Market Wealth Daily's quick little video chats that we do with top traders. I am very glad to have Blane Markham here with us because there's so much going on right now, and I feel like we are really at a critical turning point with the markets. There's so many outside factors influencing these markets right now. I want to get his take on what's going on. So I hope that everybody else is dialed in. They got their pen and paper ready to take notes. If you have comments, chime in. Let us hear what you're thinking. I'm going to open this up right now for the comments so that you guys can chat, use the chat box and let us know what you're thinking, what questions you have. We want to hear about it. This is not just Blane and I talking to each other. We want you guys to be involved. So definitely do that. Blane, thanks for jumping on. I know you've got a lot going on, so your time is incredibly valuable. So I appreciate you being here.
Yeah, absolutely. Well, thanks for having me, John, and good Monday morning to everybody watching. Thanks for being here live with us. Certainly an interesting Monday, to be looking and trading the markets. Obviously, had a lot of, geopolitical events occurring over the past week and, saw a little bit of escalation in that over the weekend. But we were, kind of watching closely the futures markets, commodity markets when they opened last night. Saw a little bit of a lift. The futures markets were mildly red. But, now that markets are open for trading, equity markets, it's been kind of largely nothing burger, John. Again, traders are just kind of stuck in neutral, just kind of sitting back on their heels, just watching, events as they unfold. Because obviously there are some great risks, just specifically focusing here on the stock market perspective. There's a lot of other avenues you can go and discuss this, the events that are unfolding, but, we're here for the market perspective, right? So, there's obviously some great risk, particularly to energy markets, some things that could happen, some worst case scenarios. And again, none of those have happened as of now. There's been no major disruption. But traders are a little weary, and I think rightfully so. There's obviously some pretty serious conflict going on, so I think that's kind of why markets, investors are kind of just staying flat-footed, just kind of waiting to react to things as they come in. Still seeing a bit of an elevated VIX because of that too.
Yeah, absolutely. I'm with you. I was relatively shocked this morning when I came on, but in that there really wasn't a whole lot of movement. In fact, I think when we first opened, indexes were up and oil was down, which is, I mean, exactly the opposite of what I would expect with this kind of news. I did jump on, kind of, getting more familiar with some of the great technical tools that are out there in the world and use Chat GPT to pull together what the impact on the market has been from the initiation of conflicts like this in the past, and was surprised that it wasn't consistently down, that there were some events where this happened, that the market was kind of flat or it continued the trajectory that it was already on. So that made me feel different. I won't say better or worse, but it made me feel different about it in that, okay, this is not unprecedented what we're seeing. This is kind of the way the market reacts to these type of events. I think our um, hindsight is always a little bit different than the actual truth. So I think when we look back at this, we, at least for me, I'm speak for myself, I would assume that it would have had a negative impact on the markets consistently every time. And it may, if you open up the window of time after conflict or what is a conflict. There's so many things that you can use to kind of adjust that data. It may be consistent and it may be a drop, and that might be what set my expectation. But it just isn't the case. Great lesson for me to back up and say, look, your emotions getting in the way again. You are emotionally reacting to what you're reading in the headlines, and you're letting that kind of gauge your expectation of the markets. Shut your brain off for a minute, look at the charts, and show us the data. So I will say I wanted to turn to you, not because I want to have you shut your brain off. It's because I know that you look at some amazing technical tools that are out there to navigate this stuff. So let me make sure I got everything set up to hand it off to you. Yeah, I do. So you go ahead, man. Take the
Yeah, let me
wheel,
go ahead and take it over here, John.
drive
But
us
yeah, no,
home.
you're exactly right. When you get a time like this, where there is some great uncertainty, and it's certainly warranted to have a little uncertainty, because of certain things that, could potentially play out should things develop in a certain manner. But, at the end of the day, as you said, looking at the markets today, all S&P 500 sectors except for energy, when I was hopping on the call today, we're actually in the green. So, it's a lot of times these things can kind of unfold this way. There's a lot of buying into the buildup or kind of around the rumor of something. And then, when whatever actually happens, maybe the worst case fallout doesn't exactly materialize. So there's, a lot of selling the event, so it's kind of the buy the rumor, sell the event, is kind of how this has played out. And it's because exactly as you said, people are kind of falling back on the data and just kind of seeing, well, okay, these things could happen, but what is right now? And that's what we're going to try, kind of try and talk about today. And again, as I like to always lead off when I join you on these calls, John, I just like to briefly mention just kind of where things are from just a top-down index level view of the market. So, of course, this is a chart of the S&P 500 looking at the past year. And, still, even though markets have been kind of, stuck in neutral, largely locked in a range, roughly between the 200-day moving average and call it 6,050 on the S&P, that's largely where stocks have been, stuck for over a month, just about a month and a half worth of trading. But we're still consistently seeing a nice bullish trend. It's still constructive, even though there has been a little bit of a tail off momentum, over the past couple of weeks, which again, we fully expected, given that stocks had rallied, somewhere, around, I think it was 20, 24, 25% or so, in about a month's time, a little over a month's time. So, a little bit of a slowdown, a little bit of a digestion period was certainly warranted, but we're far from having that bullish trend broken. This underlying bullish trend that has really developed in the past 2 months is still very much intact. We still, even as I was saying, as momentum has, kind of trailed off in the past couple of weeks, we haven't made a new short-term lower low. This low right here where we went back down and retested the 200-day moving average, about 3 or 4 weeks ago. We still that low is still there, so we're still making a nice series of higher highs and higher lows. Of course, we still have not taken out the recent higher high that we set on this bar right here. And of course, markets are still trading below the 52-week high, which, I believe we're going to be challenging here over the next couple of weeks. And I'll kind of get into that now of why I think it's set to happen. But, again, we're still seeing a very constructive pattern here, still, seeing trading that's very much akin to, just making a series of higher highs and higher lows, just with a little bit slowing momentum, which is totally fine. You have to, it's very normal in a bullish uptrend, after a massive expansionary move like we saw, to see a little bit of that slow down. But, one thing I'm seeing here, John, we kind of touched on this last week, and I'm somewhat surprised that we haven't heard more about this in financial news or, from other analysts, research firms, whatever. Maybe I just have missed it, but I have not seen anybody talking about this. And it's surprising because it's such a widely tracked technical buy signal. It's one of the ones you probably hear about the most when people start talking about technicals, whether it's on financial media or online, whatever it may be. But looking at the S&P 500 here, we're setting up in the next week to week and a half, most likely, to be getting a new golden cross buy signal in the S&P 500. And we mentioned this last week, John. For those of you, if you're unfamiliar with this term, this is simply talking about our 50-day moving average, which is our red line right here, crossing above our green line right here, which is our longer term 200-day moving average. This is a very widely tracked technical buy signal. And it is so because it has a very strong track record of predicting nice outperformance in the market to follow. In fact, I actually pulled some data on this on Friday, John, that was very interesting. After we talked about this last week, and I just looked roughly at the past 30 years, and I think there was, if I remember correctly, I think there was around 34, 36 different golden cross buy signals on the S&P 500 over that period, over the past 30 years. And so, a decent little data set there when you're talking about, a longer term technical buy signal. And the really neat thing is that one, they typically last somewhere from, around 10 months to a year is about how long that buy signal will stay intact for. But this was the really interesting thing is that I asked, my research, uh, well, I was using a chat bot to use it. It was an AI chat bot. So I was
Right.
asking it to research this data point. I was asking what is the average return? So all of those buy signals that have occurred over the past 30 years, what's the mean? What's the average return from the time the buy signal is initiated to the time a new sell signal occurs? And the average return after one of these golden crosses occurs over the past 30 years was about 20% gain on the S&P 500. Of course, there's years where it's slightly lower, some years where it's slightly higher. And of course, the peaks are probably a little bit higher as well. But, from where the index is trading at when the buy signal happens to when the sell signal occurs, on average, it's predicting, if history is any guide, it's predicting a 20% uplift in the S&P 500 on the index level. So that's why this is something that I think is really key to keep an eye on moving forward here, John. Despite all the uncertainty going around, there's, and again, as I said, it's certainly warranted to have some, maybe some mixed feelings on stocks and some mixed feelings on risk appetite right now. But this has been a very historically accurate buy signal for predicting large bullish up legs in the S&P 500. And again, I ran some data just trying to see roughly when this buy signal would likely trigger. And of course, it's all going to be dependent on where the index closes over the next week to 2 weeks, where the actual closing prices are for the day. But depending on where things close, as long as we don't have a big drop down, big retracement and retest or something, it's likely going to trigger towards the end of this week, maybe late Thursday, Friday, even potentially early into next week. So somewhere in that time frame is likely when that's going to happen. You can see it's because the 50-day moving average is starting to move parabolically here. It's starting to trend rapidly higher. And of course, we're not seeing that in the 200-day. It's starting to slope up, but it's a longer term average, so it reacts much slower. So
Right.
we're certainly watching for that one, John.
Yeah, so here's a question for you too. Obviously, you're looking at the data when that thing actually triggers the buy signals. That means it crosses through, breaks through that 200 day. It's an incredibly reliable signal. I'd be interested in how it reacts when it fails. So if it gets close to that, because once it's through, it's support, but before that, it's resistance, right? So it's trying to break through that, and that can be a key point. And we got to be ready for both sides, right? So trading this thing, obviously, it goes through, as you just pointed out, you got all the data to support it's going to keep going up. But if it hits it and fails, that could be a sell opportunity as well, that we could see a kind of a pullback, maybe not as long term as the golden cross actually occurring, but it could be an opportunity to generate a little bit of income there, right?
Yeah, yeah, absolutely. So yeah, I mean, yeah, as you mentioned, John, the signal has not occurred quite yet. It just, all signs are pointing toward this very likely, high percentage that it's going to happen very soon. But certainly things could happen. It could go up and we have a sell-off. I mean, nobody can predict the future, right? But absolutely, yeah, if it were to, fail and we go down and have for some reason had a sell-off, then yeah, absolutely. But as of things look right now, we do have a very nice constructive trend. A great the index is not certainly overbought at this level. We have the index trading just above our middle Keltner channel here. That's also being reciprocated in our RSI chart down here below. We're trading, it's the RSI is rising, but it's below 50. So certainly not in an overextended, overbought state, according to the technicals right there. And then getting ready to have this very significant buy signal, very likely set to trigger, in about a week to 2 weeks time. Definitely a more encouraging look, just, despite all the uncertainty going on. And, to also back that up too, this is something I've touched on recently too, John. This is what this chart is right here. This is the advanced decline line index, but specifically for the S&P 500. So this is not the entire, New York Stock Exchange like a lot of people follow. This is specifically the S&P 500 index. So this is looking at all issues, all stocks that are part of the S&P 500 index, and just simply looking at the total, uh, you know, volume of those shares that's advancing, declining each day. You can see we went up a couple weeks ago and we challenged the peak for the advanced decline line right here. We challenged it, but came down. We kind of met some resistance there, and it's come down, consolidated a bit, and now it's trending higher. And if if I was in Vegas, John, not a gambler, but if I were to make a gamble, I would bet you that on this attempt going up and challenging that resistance, it's much more likely that it's going to break through, and that's going to be very supportive for stocks because that's signaling increasing strength, behind the index, increasing breadth. We're still seeing kind of narrow breadth right now, but as that continues to trend up, that's going to be a nice sign, that you're starting to see some of this bullish action expand out. But with that said, we are still seeing the S&P 500 headline index. So this is just when you log on to whatever your financial news source is, looking at the S&P, talking about the actual S&P 500 index, it's still outperforming relative to its equal weighted counterpart. So just the S&P 500 stocks, they're all equally weighted as opposed to being market cap weighted. So we can see that represented in this chart right here. This is just a ratio chart. And we can see that this line is sloping up, and it's doing that because this is a ratio chart, and our numerator here is going to be the S&P 500, SPX, divided by SPX equal weight, so the SPX EW. So since this line is sloping up, that means the numerator, our top one, SPX here, is actually outperforming relative to the lower one, which is the equal weighted. So we're still seeing, it's not completely, expanded out. It's not every sector, having a massive rally up. It's not kind of the everything rally type of move quite yet. But we're still seeing some nice bullish activity in pockets of the S&P and some very great relative strength in those. So because of that, we're still keeping our focus on those sectors that are showing the strongest relative strength. And John, one area that particularly seeing some great relative strength in would be technology. And there's a couple pockets in tech that are really leading the market right now. But one that's been a little bit more emergent over the past couple months has been the semiconductor space. And again, this is still kind of getting granular here. It's not every stock within the semiconductor space. There's plenty of semi stocks that still have not caught up. They haven't gotten the wind in their sails. They're still kind of lagging behind. But the ones that are their business models that are closely connected with the AI trade, these semiconductor stocks, they have started to catch a bid, started to get a nice lift. And that's what I'm going to talk about right here. This is Lam Research, and so they actually don't make semiconductors. They're not making chips. What they do is this company is a semiconductor equipment company. So they make a lot of the different parts and pieces and equipment that's used in the actual fabrication of semiconductors. So they're kind of as people refer to NVIDIA as one of the picks and shovels types names for the AI build out. Well, Lam Research is one of the picks and shovels names for semiconductors. You wouldn't be able to see companies like, Taiwan Semiconductor, that's, a massive fabricator of chips. They wouldn't be able to do things like that they do without some of the tech from Lam Research. So, really critical business here for that whole trade. And, it's reflecting here in the technicals. We can see we have a great buy signal breaking out here. This is following one of my personal systems I like to really use. This is more of a shorter term for, if you're trying to, identify a swing trade. Looking at our 21-day EMA right here, that's our red line. We can see just really about a month ago, it crossed above our green line right here, which is our 63-day EMA. So that initiated a very clear technical buy signal for Lam Research. Again, the ticker is LRCX. And in just the past couple of weeks, we've actually broken out above, what was a pretty key level of resistance, which is, you can see the stock consolidated in the end of last year and rallied up in February as the market was rallying, making new 52-week highs. But you can see it failed at this point right here. It failed intraday, just at about $91 per share, and actually closed lower and traded, had a pretty significant down leg as the market sold off into March and April. But that was a pretty clear level of resistance right there. And in just the past couple of days, you can see that Lamb Research has cracked through that level of resistance, and it's had some follow through. It's stayed up there for a little over a week now. So, that seems to be a durable breakthrough, that level of resistance. Have the great technical buy signal going on there. And additionally, at current price levels, you can see we also have our Keltner channels thrown on the chart that, LRCX is not trading outside of the upper band of the Keltner channel, despite the recent great series of higher highs and higher lows it's been making, and that new buy signal being initiated. So it seemingly is offering, a pretty attractive entry point at current prices. So, this is one of those more emergent, industries within tech right here, John. It's
Mhm.
showing great relative strength compared to the S&P 500. So it's showing some nice outperformance compared to the broad market. This is still seeing a lot of action momentum here in LRCX. So, the way I would probably look to go ahead and trade this, sometimes these semiconductor names, their options carry a little extra time value, but in this case, it actually was not too bad if you're just looking out to the upcoming monthly expiration on July 18th, and actually selected this one right here that I was going to highlight. It's going to be the 85 strike call. And you can see I went ahead and just ran the numbers here through our call option purchase calculator. And so if you were to look at actually purchasing the 85 strike call, right before I hopped on, it was trading at 8.55 points per contract. This system I'm using here today is not exactly Chuck's power trend system, using the, 1 month compared to the 10-month simple moving average, and, using the 1% rule to identify your call option. This is more of a shorter term swing trade, again, based on the technical system I was using. So, I selected an option that was a little closer to the money than some of our other strategies that we do. But you can see it has, very nice profit potential, should this stock's run continue. You can see, if LRCX were to jump, say 5% come option expiration, this trade would be producing over a 37% return on that call. And then you can see some of the bigger returns over here if it really continues to trade higher. Say for example, LRCX were to increase by 10% come option expiration, you can see again right here, then this 85 strike call would be sitting on a 91.3% return. So, a pretty nice risk to reward there. Some really nice upside potential for this call option on LRCX.
Right. Yeah, no, that is a great find in there. All the technicals really line up nicely for that. Good way to spot that sector that's got the potential, and then drill down into the actual ticker that's going to have the best chance of succeeding within that sector. That's incredibly helpful. Definitely breath of fresh air in terms of everything that we've been looking at this morning. It just seems chaotic and crazy. That seems very logical, very probable. Those are the those are the words I like to use looking for income trades, logical and probable. And they've been harder and harder to find. So having somebody like you crawl through this and weed those out for us is incredibly, incredibly helpful.
Yeah, well, yeah, I appreciate it, and glad that you found the walkthrough pretty logical, and yeah, that's what we're all about here. With our technical systems, we're looking to, not just pick ideas out of thin air. We're looking to try and follow the data, follow the technicals, and we're not going into it with some preconceived notion of like, oh, I want this trade to work. We pull up the charts, we look at what they're saying, and we take what they're saying, and we go from there. And so, as I kind of walked you through with LRCX, there's a lot to like from a technical perspective. And
Right.
that's largely what we're chasing, and what we're after, using these strategies and trying to identify pockets of opportunity out there. And so, John, were we going to talk about my WPO today?
Yeah, absolutely. So that's kind of where I was leading with this is you have a knack for this stuff. I know you do it every week in your weekly profit opportunity. You take something, a trade that you found like this one, and this is, I believe, different than in addition to what you're looking at there, and you'd send it out to everybody who's on that list, uh, doing all the heavy lifting, doing all the hard work, really making it easy for people to take part in these things that you're finding, these little kind of needles in the haystack that you uncover. So it's a great service. If anybody is watching this or listening to it and at this point hasn't taken advantage of it, really you need to do so. We'll definitely put the links in there. I also wanted to give everybody a little bit of an update too, because you got a great new program that's starting tomorrow, and this is exciting. And I know that our audience, we do everything we can to kind of like explain everything to everyone, what to expect and how to stay on it. But I know you're launching the Trade of the Day live tomorrow, which is it's similar to this in that it's a live session where you're on there live, you got people asking questions. The difference is you've got the whole optioneering team, like the full horsepower behind you guys, and you're going to be going into the market. And I can't get enough of these events, so I'm really excited about it because, especially with all the factors going on in the market right now, this is what we need. I can't wait until tomorrow to find out what somebody said yesterday. Doing it real time really makes a huge difference.
Absolutely, yeah, no. So yeah, tomorrow, really excited. It's a new project that we're doing over here at Hughes Optioneering, and we're going to be sitting down live. It's going to be every Tuesday and Thursday, and I'm going to be sitting down live, kind of as you said, on a Zoom call, just like this, with my trusted colleague here, Helene. For anybody that's familiar with her, she's right down the hall from me. She's great. She's amazing. Looking at some of these charts and finding opportunities, and that's what we're going to do. We're going to sit down. It's going to be similar to if you followed our Trade of the Day newsletter for some time. We like to show you just kind of some basics of technical analysis, how we go about finding different opportunities out there, and what we do with them, kind of like what we did today. But it's going to be Helene and I talking about that. Just kind of going back and forth, pretty casual, talking about the markets, what we see, what's, maybe some things that's kind of on the horizon for us. So it should be a great time. So yeah, would love to have you bring your cup of coffee tomorrow morning, and I would love
There you
to have
go.
you join us.
Yeah, it'd be great to. I think the biggest difference is now you'll have, you won't be carrying the dead weight of somebody like me asking all these questions. And, I like to think I bring the perspective of a relatively, newbie trader. Even though I've been in this business for a long time, I'm a little slow on the pickup, but you're gonna have like the sharpest tools in the shed, both of you guys sitting there kind of walking through all this stuff and unveiling everything.
Don't
So
sell
that'll be
yourself
really
short there, John. You're the senior elder Jedi master over there. So don't sell yourself
oh
short.
yeah, there. We'll go. Thank you for the compliment. I'll accept that nicely. I don't know if I agree, but I'll accept it nicely, and we'll get going. Well, I'm going to put links to this stuff in the email that we do to send out the replay. So if you see this, you're probably already seen that email. Scroll down a little bit. You'll access all this stuff, the weekly profit opportunity. We'll get you links to tomorrow's Trade of the Day live. And you and I are going to be back again Wednesday. So we're going to follow up on this trade specifically, see how it did. And they're just, again, there's so much going on right now. I'm very grateful for your time, Blane. I hope everybody else is. And I want the audience, to feel comfortable coming back and joining us because we're going to keep looking at this and try to keep informing everybody on where the opportunities are.
Yep, absolutely, 100%, and that's why I love to be able to sit down and do these sessions. I love to be able to share with folks what I'm seeing in the markets out there, and the things that I think are most crucial to kind of keep your eye on, what could be moving markets, and just what to expect. So, yeah, love to see folks back here, and hope everybody has a great rest of your week. And yeah, I'll see you either tomorrow or on Wednesday. So take care, everybody.
Take care. Thank you all for joining us.
Yep.